South China Morning Post, 27th of September 2023, U.S. companies claim China is still vital, but optimism about better futures wanes. As confidence in China and its hegemonic design wanes worldwide. For the second year, U.S. companies' optimism toward their commercial prospects in China is at an all-time low. Yet, a recent survey reveals that 74% of companies still rank China as one of their top 5 priority markets. According to the U.S.-China Business Council's annual survey, U.S.-China tensions overtook COVID-19 shutdowns as the most significant obstacle U.S. enterprises encountered last year. Of the 117 participants, 84% reported adverse impacts on their enterprises, such as postponed investments, reduced sales, and disturbed supply networks. The future will be determined by the policy choices taken by both governments. Allen noted that the poll data was not broken down by industry and that different businesses felt distinct pressures from both sides. He said the consumer goods, food, and energy sectors were going very well, while the technology sector was quite a bit more complex. Among the 276 members of the USCBC are well-known corporations like Nike and Amazon. The survey was completed in early July, just before the two governments intensified their economic diplomacy. It was conducted between June and July. This includes visits to China by Treasury Secretary Janet Yellen and Commerce Secretary Gina Raimondo, the development of a collaborative working group on trade and investment matters, and an agreement to create a system of information sharing regarding export regulations. It was the first member poll conducted since December when China started to lift domestic COVID-19 limitations. In March, significant travel restrictions were also loosened. Merely 2% of participants expressed greater optimism towards the present business environment in China compared to the start of the pandemic 3 years prior, while 83% expressed decreased optimism. The post-COVID recovery in China has not lived up to predictions. The country's GDP grew 6.3% in the second quarter of 2023, up from 4.5% in the first 3 months but less than the 7.3% growth predicted. This year, only under 50% of U.S. businesses were as optimistic about their 5-year outlook as they were 5 years before, 75%. A record high of 28% of respondents said they were pessimistic or somewhat pessimistic, an increase of 7% over the previous year's survey. Over 50% of the corporations polled said China's regulatory and policy climate and geopolitical worries were to blame for their pessimism. Unlike the previous year's study, businesses' top concern has been U.S.-China tensions since U.S. President Donald Trump began a trade war with China in 2018. Their highest ever ranking on the list, China's data policies, which came in 4th place in the survey the previous year, were now the second biggest challenge. According to the research, Beijing has recently prioritized data regulation and personal information protection, but many of the implementation specifics were vague and expensive. Since the first draft of China's cybersecurity law was released in 2015, there have been ongoing concerns, according to Kyle Sullivan, Vice President of Business Advisory Services at USCBC. However, he continued, businesses were beginning to experience more tangible impacts from China's data policies. As in past years, one of the main concerns was how China's industrial strategy would affect the competitive environment. Comparing this year to last, the competition from Chinese companies increased to 4th place. 90% of respondents said they would lose market share within 5 years as Beijing pursues methods to promote homegrown champions. This is a 31 percentage point rise over those who said the same in the previous year's study. Concerns about export controls, sanctions, and investment restrictions have increased, moving from 6th to 3rd place in the list of problems compared to last year. as the two nations apply more and more hurdles to trade and investment. Nevertheless, very few businesses intended to leave the Chinese market entirely. While this percentage was higher than 16% the previous year, just 23% of respondents had moved or intended to relocate specific businesses outside of China. In contrast to manufacturing in China and exporting to foreign markets, over 80% of respondents stated they were in China to reach and serve the Chinese market. China was ranked as the world's top priority market by nearly a fifth of businesses and as one of the top three by another third. However, an unprecedented percent of respondents, or 9%, stated that China was not a priority market. Additionally, the USCBC highlighted a few encouraging announcements from Beijing, such as the State Council's 24 measures, released in August. The steps include accelerating security reviews required for cross-border data transfers and giving national treatment to foreign firms in government procurement and standard-setting projects. Additionally, 80% of the businesses questioned could maintain a profit, even though this was the lowest percentage of profitable responses in 10 years and a 9 percentage point drop from the year before. Similar to those who responded the year before, the majority postponed allocating resources for the ensuing year to wait and see. Like the previous year, 25% of participants stated they intended to increase their investments in the Chinese market in the upcoming year. However, this percentage decreased from 50% to 25% 5 years ago. From 4% to a record 18%, the number of corporations intending to reduce specific commitments has more than doubled during the 2018 study. In the long run, I believe there is still a significant opportunity for businesses in China due to the size and growth of the middle class. And companies also realize that being in the Chinese market, near suppliers and customers, is essential to competitiveness globally.